Hi there, welcome to Kneppy Invest and welcome to May 19, 2025. Time is 3:21 p.m. So about 49 minutes left of trading today on an unsurprisingly red day on our market. I'll talk about why it has not been a surprise that we've seen a bad day today. Well, relatively bad day, particularly when we compare it to the last few weeks. So I'll talk about that during the ASX Today part of the video. But before that, a few things I do want to briefly discuss, including I did a standalone video on one of your questions and or comments. Then I'll touch upon another question you had that I did not answer satisfactorily in regards to graphing, markup, and or enterprise value. And then we'll have a look at a really intriguing Sydney Morning Herald article, which sort of has a bit of a relationship to why the market is down today. And then we'll go through the ASX today, discuss why the market is down, look at the worst and best performing sectors, indices, and also companies. And then we'll talk about the top 5 stocks of the day, a few interesting companies within that, including a company that did release a half-year result, a company I used to be trading but don't own anymore. And then I was going to say I might have a look at one of your comments and or questions, but since I did a standalone video on one of your questions and or comments, I probably won't do that today. Talking about that question or comment, it was from Trent Howard. It was released or written just before I started recording. And the main question was, why do people say there is a link between silver and gold? And this could have been the easiest question I've ever had to answer. And I just mentioned there is a gold-silver ratio, and the gold-silver ratio has been in existence for over 2,000 years. In fact, it is the longest continuous exchange rate in the world. And yeah, we do measure the link between gold and silver through this ratio. Yeah, you could say the ratio is becoming weaker and weaker, but if you do have a look at the last 110 years, 105 years, this is the gold to silver ratio. It's historical highs right now. And back in the 1930s, 40s, it was historical highs then. And then it fell all the way from 100 down to below 20 during the 70s and 80s. And what happened in the 70s and 80s? We saw heightened inflation, that sort of thing. And where are we possibly heading right now? Maybe a period of a longer inflation. That's what the bond market is fearing right now. So even though that does look like there's a bit of a trend over the last 100 years, who knows? It could fall back to 20. So if anything, gold-silver ratio has been trading in a range between about 15 and 120 over the last 2,000 years. Yes, 2,000 years. So thank you for that comment, Trent Howard. One of the easiest questions I've had to answer because I do know about the silver or gold-silver ratio. In fact, you can see this, and you can see the gold-silver ratio just in TradingView. It's not a long one. It only goes back, if I remember correctly, it only goes back, silver ratio, it only goes back 25 years. Here it is, 25 years of the gold-silver ratio. And it's almost above 100 right now. So it is at elevated levels compared to history. So if anything, if you just look at this, you would say and could say, well, silver's the commodity to be in right now, just based off the gold-silver ratio and where it is compared to historical levels. Okay, so that's a standalone video I did. In fact, I talked about it just as much in this particular video. Now on to graphing market cap. So this is via FinChat, and I always have a look at this graph on the right-hand side. I'm pretty sure it's on your right-hand side. It's on my right-hand side anyway. And the reason I look at this is because I always have a look at price changes over time and also total returns. That's the main reason I use this, because it gives you a total return of a company, KR, over a certain period of time. You could look at the last 5 years, 10 years, 15 years, 20 years, 1 year, 3 year, whatever you want to do. So in this particular version of FinChat, I'm looking at CSL. And over the last 20 years, the total return of CSL has been, 18.8% KR. And what is it? Does it give a percentage turn? No. But, 3,058% return over the past 20 years. But if you have a look at market cap, yeah, just have a look at the graph of market cap. There it is. There it is, the graph of market cap for CSL over the past 20 years, CAGR of 15.8% per year. In fact, The market cap of CSL has gone from $6 billion. Yes, not yet. Actually, fact, under $6 billion in May of 2005, up to $120 billion in May of 2025. So the market cap of CSL has grown 20-fold over the last 20 years. Yeah, so one-fold per year. Yes, one-fold per year. And if you do prefer enterprise value, they also have that here as well. So this is probably the best graph of market cap of a company I have seen, or that I can think of anyway. Okay, now on to the Sydney Morning Herald article. Fantastic article. And thankfully, I can show you this article because I don't have to pay for it. For some reason, I was given this article for free. So this article was, I won't go through the whole thing. The world does not owe Trump's America a living, but a really interesting article in terms of the bond market. Angry bond markets taught Donald Trump a lesson over tariffs, but some really interesting insight in this particular article. I'll just tell you some really scary things that might happen. I won't say they will happen, but they might happen. See if I can find it first. Okay. Global bond vigilantes are not stupid. They can see that Trump is trying to bully the Fed's Jerome Powell into slashing rates and that he'll stack the Fed board over time. He'll pressure the institution to soak up the debt, inflation be damned. The clear risk is a stealth default via debasement, which the Fed already did once to pay for COVID and Bidenomics, tolerated only because it was arguably an innocent monetary error rather than deliberate theft. Rojoff says that... so this is the guy, says that episode was a amuse-bouche. I've really never heard of that term before. So sometimes when I don't know, or I've never heard some term before, I just look it up. Amuse-bouche, French for mouth amuse. Well, yeah, bouche is mouth in French. Mouth amuse or complimentary bite-sized hors d'oeuvres or appetizer served before a meal, typically in fine dining. Well, that's why I've never heard of this, because I'm not a big person. I'm not a big fine dining person. I have no interest in fine dining. Anyway, he fears, Rojoff, by the way, Rojoff is, where is he? Where is he mentioned, first of all? Where was he mentioned? I can't remember. So Harvard professor, author of This Time is Different, 8 Centuries of Financial Folly. So Harvard, yeah. So some people might be a little bit negative against Harvard, but I'm not. Anyway, so he fears inflation could reach 20 to 25% in the next wave. Do I think that could happen? Well, maybe, but I'm not so sure. Anyway, so which may not be far away. No bondholder waits for that. Once in motion, it becomes self-fulfilling. The vigilantes also know that Stephen Moran, head of the White House Economic Council, has talked of an outright default by means of a forced debt swap or a fee on foreign holders of US Treasuries, on the alleged grounds that American foes have been buying US debt to suppress their currencies and snatch export shares. Anyway, so a really good article in Sydney Morning Herald. I suppose you can probably get it in The Age. And what's the Brisbane one? Brisbane Times. Interesting times we're in. And the main reason I think we're in interesting times right now is because of debt. Debt. Get debt. Too much debt destroys. Too much debt destroys. That's why I don't want too much debt in my personal private life, because it can destroy you. It can absolutely destroy you. In fact, I'm pretty sure Warren Buffett has a few good sayings about debt. A great investor can go. In fact, I'm going to ask ChatGPT. Warren Buffett quotes on debt. So I'm pretty sure he has some really good quotes on debt. Quotes on debt. Let's see what he says. Let's see what Warren Buffett says. I've seen more people fail because of liquor and leverage being borrowed money. You really don't need leverage in this world much. If you're smart, you're going to make a lot of money without borrowing. If you're smart, you're going to make a lot of money without borrowing. The most important thing is to find yourself in a hole is to stop digging. When you combine ignorance and leverage, you get some interesting results. You can't go bankrupt if you don't have any debt. Yes. Only when the tide goes out do you discover who's been swimming naked. That's probably his most famous saying, or one of his most famous sayings. I hear people say that a lot. Anyway, let's go back to the ASX today. We've had an interesting day on our market because we are down, which is not a surprise, but what's been happening through the day, which has been a little bit surprising now. On Friday evening, I'm pretty sure it was Friday. No, it would have been Friday evening. It would have been Saturday morning our time. Moody's downgraded the US credit score from AAA to AA1. Now, I'm not a big expert in what all that means, but I did see this nice little blurb in Market Index this morning, and it just mentioned that analysis warned that the move could see investors demand high yields on treasuries, which leads to inflationary scenarios. Inflationary scenarios. And I think one of the reasons why they've done this is because of debt, the debt levels in the United States. And to be honest with you, the government, not only this government, the previous governments have been doing nothing about the debt levels in the United States. In fact, they keep increasing the debt levels in that particular country. So that is why, because as soon as they did that, the American futures just dropped. Well, actually, they dropped this morning or last night because they did on Friday evening and American futures weren't open. And you can sort of see that in two things. First thing you can see that is just in the futures. So if you go back to the American futures, you can see, by the way, NASDAQ is down 1.32%. That's another reason why we're down big. So if you just go to 1 minute futures, so it looks like, yeah, so we saw a massive drop in their futures at about 6 a.m. on Saturday, and it's been dropping all through the day. In fact, there was a bit of a rally before we opened. Now, this is weird. I expected a rally between about 10 and midday our time, but there wasn't. The reason I said that is because if you have a look at the XGO, we saw an almighty rally between 10:45 and 12:20. In fact, at one point, the XGO was almost back in the green. And at that point, because I was following it, I was watching some TV, and I was like, what's the XGO doing now? Oh, it's almost in the green. What's happening? I don't know. Is it just too much enthusiasm in the market, a buy the dip mentality? I don't know. And then we've just seen the market drop significantly since then. And I think the reason behind that is because of futures in America, because futures been going down since then. So that's why we've had a negative day today, because of Moody's downgrading US credit score, and American futures are down. I'm assuming the Asian markets are down. Yeah, Asian markets are down. Yeah. The other thing is you can see exactly when, I think you can, I could be wrong here, you can see exactly when Moody's downgraded US credit score just by looking at US 30-year bond yield. And there was a massive rise in the bond yields at about 6:46 a.m., just when we saw that massive drop in American futures. So bond yields just rallied significantly after that, got up to 5%, almost. So the peak in the 30-year bond yields at 2:50 p.m., so we're talking about less than 40 minutes ago, reached a peak of 5.001%. Yes, 5.001%. I did hear something really interesting on a podcast. I can't remember which podcast, but this podcast said when the US, either the 30-year or 10-year bond yields get to 5%, you're going to see the market or the equity markets drop a fair bit. And one of the things that has been confusing a lot of the experts out there is we've seen bond yields rally and also equity markets rally. So that's actually quite rare. I think that's rare. You expect to see the complete opposite. So if the equities are rising, bond yields are dropping. So bond yields are rising. They don't care about the equity market. So the equity market should be looking at this, say, hey, bond yields are rising. The bond market is seeing something here. The bond market is concerned. So I'm just going to change. I can use my mouse for both computers. There we go. Yeah, my other computer just went black. Okay, so bond yields, US 30-year bond yields or bonds are at 4.986% right now. Look at that. Look at right on 5%. So people say taking good analysis doesn't work. Look at that. Is 5% a resistance level of what? Got the 5% in January, got the 5% again in early April, and now right on 5% again. If it breaks through 5%, all bets are off. Okay, now on to the best and worst performing sectors and indices. So you would assume like real estate should be down. That's about it. I'm assuming most sectors are down. Maybe staples is up, maybe a few sectors up, maybe healthcare, I have no idea. And by the way, you can actually see this. There was a really good rally between about 10:30 and around midday Not only the XAO, XJO, in fact, the XTX was positive for about 2 hours, and now it's down 0.5%. So I think maybe a little bit of buy the dip situation. Some people, some retail investors saw the market down on open and went, oh, the market's down, I can buy now. Oh, I'm getting great value here. And unfortunately, there wasn't too much follow through from the rest of the market in that late morning period. Okay, back on to the best performing sectors and indices. Utilities. I would say utilities is probably mostly defensive. Telecommunications. Yeah, I think telecommunications is probably defensive. Staples, probably defensive. Healthcare. Yeah, I say a lot of healthcare is defensive. Then we go less defensive. Financials, definitely not defensive. I'd say financials are highly cyclical, particularly the banks are highly cyclical. IT, yes, well, yeah, not defensive. Industrials, discretionary, real estate down big, not surprising there, and materials and energy. So we must have seen a fair bit of weakness. Oil, natural gas, uranium, coal, maybe all down. We can have a look. We can have a look, I suppose. Cocoa up a lot. Bitcoin about down a bit. Let's see, oil. No, not much. Uranium. Oh, uranium's down. So uranium is down. Oh, that's Friday. Coal. Not massive drops in anything. Okay, so it's going to be interesting to see what's happening. Let's have a look right now. We can do it. Let's open up energy. What has fallen in the energy sector? Has it been broad or has it just been one particular energy group? If we have a look at the energy companies by market cap, they're all down. Everything's down. Oh, New Hope. Oh, this makes sense. Sorry, it makes sense now, New Hope. So New Hope is actually the stock of the day. Faceplant. New Hope is the stock of the day. They released an like a quarterly update or something, and it was negative. In fact, they did a downgrade, if I remember correctly. Yeah, so New Hope down 8.52%. It all makes sense now. And there's looks like other coal companies are down because of that. Whitehaven down 4%. Looks like maybe a little bit of weakness in uranium as well. Career Energy up, go Career. Anyway, so it all makes sense now. Sometimes I don't know. I'm a little bit curious, and sometimes all you have to do is open it up and have a look. Gold's had a good day. Yes, gold's had a good day. Banks, in fact, the ASX 200 banks is up. That doesn't make sense. It's not make sense. It should be down. Should be down. Again, the market can remain irrational for a long period of time, and it's doing that with the banks right now. Okay. Oh, let's have a look at the ASX 20. Yeah, let's do that. Down 0.57%. I'm assuming two of the banks are up, two of the banks are down. What's going to be up? Is Telstra in the ASX 20? So Telstra, maybe Transurban's up, something like that. Let's have a look. We'll say 6 up, 14 down. A few banks, 7 up, 14 down. We have REA Group, Coles. Oh, Coles and Woolworths. I forgot about those. CBA. Insanity. It's insanity. In fact, CBA is the only bank up. It's insanity. It is. If you're buying CBA right now, I think there has to be questions about your sanity. And the worst performing company is Fortescue, Macquarie Group, BHP, and WiseTech. Also, ANZ Group. Again, ANZ is by far the better value of the banks. Definitely not the better quality, but it's better value. So it's for ANZ to be down 1.52%, but CBA at 1%, it just doesn't make sense. It's insanity at its highest levels. And it just shows you that the market's not efficient. There is no way you could say the market is efficient when you have CBA at a valuation like it is. It's insanity. It's not efficient at all. Okay. I'm sorry I got on that spiel. I could always do that. Talk about CBA. I will buy CBA if I see some good value. I just don't see it. Okay, now onto the top gainers. And Charger Metals. That must be a new, that's a new listing. Or maybe they're doing something. That Tico looks weird. Charger Metals. It says an ETF. It's not an ETF. We don't have to talk about that one. Charger Metals. Charger. I just want to see what's happening. They could be doing a consolidation, but I'm wondering if it's a new listing. No. What? Oh, I put the wrong thing in. It's CHRCA. CHRCA. Oh, what is this? I have no idea. I don't care now. Xanadu Mines. Oh, Xanadu Mines. Let's have a look at Xanadu Mines. This one's interesting. I don't remember Xanadu Mines releasing anything. That's because I probably just moved on to the next announcement. Recommended, takeover bid looks like. Recommended 8 cents per share cash offer. Okay, so looks like there's some sort of acquisition for Xanadu Mines. Unfortunately, what's her name? What's her name? The Greece woman, Australian woman. Oh, how can I forget? She also sang Xanadu. She was in Xanadu, and let's get Olivia Newton-John. So unfortunately, Olivia Newton-John is going to be taken off our market. I always think of Olivia Newton-John, even though I might forget her name, when I see Xanadu Mines. What else do we have here? Nothing. Urbanise is in my top 5 stocks. And OFX Group is not, but Electro Optic System is also in my top 5 stocks. What's happening with OFX Group? When the share price of this sort of company is up 16.4%, they've released something, but I don't remember this company releasing anything. So did I miss something? And they're in a trading halt. No, I did not. I am assuming this trading halt is a price query from the ASX. Let's have a look. Trading halt is requested pending announcement by OFX regarding its 4-year financial results and in response to the ASX price query. Loose lips. Someone saw their 4-year financial results and they went, let's start buying some OFX shares. Yes, and there won't be any inquiry into this. It's going to be deemed okay, and this could be interesting chart. Is this a trend killer event for OFX Group? Ooh, looking pretty interesting, particularly if the whole reason the share price has run up today is because their results are better than expected or something like that. Anyway, so that's interesting. OFX Group, I did not expect that. I'll talk about Electro Optics in the top 5. Company called Matrix Composites and Engineering. Company I was following because I do think there is potential, but looks like there was some sort of takeover or something. It was a reverse takeover. I didn't understand this. Yeah, this company is a real company, and then clarification to response to media article, and they're talking about a reverse takeover, which means, I don't know. Yeah, regarding conditional non-binding indicative merger proposal. Okay, it's merger proposal they've mentioned here, but they also mentioned reverse takeover somewhere here. I'm pretty sure they mentioned reverse takeover. Maybe I'm just thinking stuff up because they're talking about merge group, that sort of thing, but I'm sure they said reverse takeover. Yeah, I could be wrong. I could be making stuff up. But it's a merger. We'll just call it a merger. And let's move on to the next one. Top gainers by market cap. I don't expect to see much here. AMA Group. Damn you, AMA Group. Fall back a bit. So that was a nice little breakout, about 7 cents. I mentioned AMA Group in my last 2 technical update videos, and the share price up 6% today. So maybe that has just run up a little bit too far for my liking. And I'm not going to catch a runaway train. And that's about it. So let's have a look at the top losers. Top losers. Okay, EchoIQ. Oh, EchoIQ is in my top 5, so they can move on. Nothing much here. Liontown Resources. They were up big at the end of last week. Now they're down big. I don't think they released anything today. So let's just, oh, no, wait, I'm wrong. No, Friday night, they did receive a price and volume query from the ASX. Yeah, that's right. Yeah, response to ASX price and volume query. And I did see this. They did not answer anything. This is like the most boring answer. to one of these price and volume queries because they said no to question 1, which is okay, and then not applicable to question 2. But in question 3, they can be really creative. They can say anything really because the ASX wants to know is if there's anything else out there that the company knows about that could explain why the share price has moved. So Liontown could have said stuff like, there was a nice little note from an investing firm that said some really good things about Liontown Resources, that sort of thing. And a lot of times you will see some really good creative explanations from companies, but Liontown just says, no, we're not aware of anything. Boring. So I think the market just went, boring. We're going to sell you down because they were up. What are they up? Wait there. Yeah, this was a while ago. So share price went on a massive 2-day run a while ago. So yeah, anyway, I'm going to go and have a look at this price and volume query. I thought they were up big on Friday or maybe Thursday, but sometimes in the ASX price and volume query, they talk about, they're talking about an 8-day period. When Liontown Resource share price went from 54 cents to 81.5 cents. So they're talking about an 8-day period or 9-day period. So sometimes it's that long of a period that they're concerned about. Sometimes just one day. Okay, so let's have a look at the chart for Liontown. This was looking possibly interesting, not now. So that's looking interesting, and now it's just gone bonkers down again. The reason I was liking this one is because of the volume, really big volume coming in. What was causing this big volume? So this is where they could have got creative. If they knew someone big was buying up shares, they could have mentioned it. Even if they didn't get to 5%, they just could have mentioned such and such, or they could have made it anonymous. Big fund managers buying lots of shares because they think this company is undervalued. They could have done that. Up and down, not surprising. A lot of volatility in that company. And that's it. Top losers by market cap. Minres, Pilbara, New Hope. Not surprising list here. So a lot of these companies have run up big over the last few weeks. So a little bit of hype, a little bit overhype, we'll call it. And I'm not surprised to see some of these share prices of these companies pulling back. So even Minres, share price has gone bonkers the last few weeks. It's run up a fair bit. So I would say there's a bit of profit taking happening. So share price has gone from about $14 up to $27. It's almost doubled over a 3-week period. So it's not surprising. We're starting to see a bit of selling coming in. And if I was trading this, I'd be getting out right now. Or maybe even you can see share price hit the 100-day moving average and started to roll over. Yeah, that could have been the sign to get out. And some of the other companies have also run up big, but Pilbara, I wonder if Pilbara's down because of Liontown. Don't know. Cetai down big, because they've run up a fair bit as well. Okay, now on to the top 5 stocks of the day. We'll start off with, should I talk about some of the companies that did not quite make it? No, we'll briefly discuss Dicker Data. Mr. Data, Mr. Dicker, not Data. We're not talking about Star Trek. Mr. Dicker, I'm trying to remember his first name, David, has gone bye-bye. He said, I'm done with this. I'm gone. I'm going to do other stuff. I'm going to surf and sail and go to lots. I'm pretty sure he's single now. He went through a divorce. So I'm going to go and have good times with all my girlfriends who are 50 years younger than I am. Anyway, so he must be pretty old because he founded the company in 1978, but he's stepping aside. Stepped down from his position as CEO, chairman, and director to pursue other interests, which, good on him. I say, go enjoy life, Mr. David Dicker. Enjoy life. You only have one. Enjoy it. Anyway, share price up 2.12%. I thought maybe the share price would go down, but no, the market likes it. And the other one was Dominos. The ANZ CEO has gone bye-bye as well. So he's gone, and the share price is down a little bit. In fact, the share price of Dominos just keeps on dropping. I'll have a look at the chart for both these companies fairly quickly. Not interesting. Dicker Data, no, not there with Dicker Data. Still in a bit of a downtrend. And same can be said for Domino's, still in a downtrend. Yep, look at that, still dropping. No interest in that. Okay, now on to the top 5 stocks of the day. Starting with EchoIQ. EchoIQ, share price down 25%. Oh, they're in trading halt. Oh, that's right. I knew this. So EchoIQ down a fair bit, and looks like the share price was down on no news. So this is going to be a price query. And I actually did have a look at this because I was interested why the share price was down a fair bit. And they sort of mentioned something in this. Okay, so granting of a trading halt in the securities pending an announcement with regards to a decision made by the American Medical Association regarding a Category 3 CPT code and a response to the price query letter received from the ASX. So that's why the share price is down, because of this decision made by the American Medical Association. Now, this decision could already be out there, could be in the public sphere, so may not be EchoIQ's fault, but you would think they'd be paying attention to that sort of thing. I don't know. You would think so. And if they saw it, they should have put the company into a trading halt. And obviously, it's negative. Obviously, it's negative. I wonder if this would be... I wonder if we could do this or put this into ChatGPT. Let's have a look. See if we can do it. We'll get rid of that and we'll just say... Oh, okay, no, they're putting it as a template. What is... Oh, stop. What is... Oh, I've got a right stupid keyboard behind the microphone. Searching the web, that's what we want to see. Has announced the addition of 40 new Category 3 current procedural terminology codes effective July 1st, 2025. These temporary codes, okay, boring. Okay, how does this affect EchoIQ? I have no idea. How does this affect EchoIQ? Let's see if we get any answers. Oh, hold significant implications for EchoIQ, particularly concerning its AI-powered diagnostic tool, EchoSolve AIS. Okay, enhanced reimbursement pathway. Oh, that sounds positive. Market expansion adoption. Okay, I don't know. I have no idea, but I'm assuming the share price was down because this particular announcement was going to be negative. That's why the share price is down, and there was someone who knew about it. Share price has collapsed. So let's have a look at the chart for EchoIQ. And yeah, look at that. Share price was in a nice uptrend. All of a sudden, share price down a lot. Now, if you have a look at the 1 minute chart, looks like there was a bit of selling. Yeah, I don't know. A lot of selling between about, we'll say about 11 and midday. I don't know. Interesting goings on with EchoIQ. Is this an overreaction of the market? Did the market get this wrong? And is this positive for EchoIQ? If you know, because based off this little thing in ChatGPT, it sounds positive. But I could be wrong. I could be reading this completely wrong. Yeah, it says it's positive. The conclusion is positive. So ChatGPT could be wrong because ChatGPT is not perfect. It can be wrong quite a bit. Okay, now on to Urbanizer, or Urbanise, I think it's called. I still remember when this company listed, it was many years ago, and it's done nothing since then. Share price up 14.29% on some sort of deal with NAB. Yeah, strategic partnership with NAB for Australian strata customers, or maybe it is AUST strata customers. I'm glad I did not buy like a unit or anything to stay away from strata. Anyway, so a partnership agreement with NAB for the development, implementation, and ongoing delivery of data and payments integration services for Australian strata customers. Parties have also entered into an equity investment agreement under which NAB has acquired 15% of Urbanizer share capital via placement and may acquire a further 4.99% via future placement following launch of the data payments integration services. So they might have almost 20% of Urbanize, and I'm pretty sure at 20% something happens. Not sure exactly what. Maybe something happens. That's why they're going to 19.99%. So I've seen these sort of deals in the past when there's a small company and a big company. And initially I was really excited about these deals, but then I realized over time that typically these deals favor the bigger company. The smaller company typically gets screwed out, screwed over, that sort of thing. Doesn't mean this is going to happen here. Maybe this technology is really going to be beneficial for NAB, and they're going to be a very good partner for Urbanise, but I am a little bit dubious. So let's have a look at the chart for Urbanise. And I still remember, and I think one of the reasons why I still remember this company listing is because the share price went on a massive run. Let's have a look. Yes, it did. Oh, that's right. And then share price just fell like a rock. So share price went on a pretty big run. This was 2014-15. Share price went all the way up to $23. I'm wondering if there's been a share consolidation, and now the share price is 80 cents. I'm pretty sure that there would have been a share consolidation at some point, but yeah, post consolidation, share price has gone from $23 to 80 cents. We're talking about the share price decreasing, what's that, 98% or something? It's a fair bit. But in saying that, share price looks like it might be trying to go on a run. It does look like it's liquidly traded. Nice, okay volume coming in today. Some really good volume coming in September, August 2023. Look at that big volume. That was sort of hinting there was a low coming. And the reason I say that is you see some good volume coming in because someone's saying, oh, good value. But then you want to see some more volume. And we did see enhanced volume through the rest of the year. And then we saw bigger volume coming in January. And that was sort of just before the share price took off. Am I interested in this one? Probably not. Let's have a look at the liquidity. So 44 trades today, 148,000 shares traded. If you have a look at the trade history, yeah, it doesn't trade every single day. In fact, there's lots and lots of days where there's no trading. And even some days when it does trade, like at 7 shares, 117 shares, yeah. So there is a bit of liquidity issues with Urbanise. But deal with NAB, can't really ignore that. But again, I'm a bit dubious. Electro Optic Systems coming in at number 3, share price up 14.73%. Now, when I saw this particular announcement, I was like, yeah, okay, that's fine. New singular counter drone order for 53 million Australian dollars. And I'm just thinking, yes, fine, but because this company is capital intensive, how much profit, how much money they're going to get out of this, I don't know. We see this a lot with Electro Optic Systems. Receipts and revenue can be quite lumpy. All you have to do is go back to the most recent Appendix 4C. And if you go have a look at the cash receipts of 22.7 million, operating cash flow negative by 26.8 million because product manufacturing costs and operating costs a fair bit. So you do see this a lot with Electro Optic Systems. They have really good quarters and really bad quarters. A lot of lumpiness there because there's no recurring revenue. And I do know people don't like that. A lot of investors don't like that. They want the safety or the safety net of recurring revenues. But I do think there's definitely an argument that Electro Optic System might be good value. I don't know. I haven't looked at it for a while. Anyway, let's have a look at the chart. The chart is a big from me. So I do own a very small amount of shares in this. Ooh. I was going to say, I do own a few shares in this company, not a lot. It's in my super. And I originally bought 10 years ago, and then I sold in late 2019 or early 2020, and I decided not to sell completely. I'll just hold a portion of shares for the long term. And unfortunately, share price has gone from $10 when I sold to $1.49. I should have sold out completely. Anyway, I'm willing to trade this. I've traded Electro Optics in the past, and this actually does look sort of interesting. It's broken through a nice little resistance level, and we haven't seen a lot of selling today. That's a good sign, and some really good volume coming through. So, unfortunately, I'm going to have to lower the line. Stupid sun getting in my face. Anyway, so I actually don't mind this chart. I thought the chart was going to look a little bit worse than that. Company coming in number 2 is Gentrack, who did release results. Where is it? So half-year results, I will only have a look at the media release. Now, my biggest wouldn't say complaint about Gentrack. My one slight red flag about Gentrack is just valuation. So Gentrack currently has a market cap of $1.2 billion, $1.17 billion, so fairly close. I was trading this, bought in 2020, sold recently, and the main issue I had was valuation. And this was it 8-bagger for me, something like that. 6-bagger, maybe 6-bagger. And I was thinking I could put that money to better use because I don't think this could be a 6-bagger over the next few years because of valuation reasons. So that's the only reason I sold out, was because of valuation. And the chart wasn't in a really good uptrend either. And these results, I think, justify that. Nice growth in revenue, EBITDA, profit, but we're not seeing a massive growth. If we were seeing a really massive growth in all these metrics, I would have been, oh, maybe that was a bad decision selling. But revenue up 9.8%, recurring revenue up 16.7%, EBITDA up 5.1% to 13 million, profit of 7.2 million, up 34.7%. So again, valuation, $7.2 million profit in this half year. You just analyze that. So they increase their profit in the second half, say to 9 million. We're talking about $16 million profit, $20 million at the max, and even at $20 million profit, we're talking about a PE ratio of above 50. So there is a bit of valuation issues I do with Gentrack, but I was willing to hold on when the chart looked pretty good, but right now the chart is looking like it's more wanting to go sideways than anything else. So beautiful uptrend for quite a few years, and I do think the trend has come to an end for Gentrack. Now, in saying that, we have seen some good buying today. We've seen a solid green candlestick. So it looks like there was initially a bit of selling, and we've seen a bit of buying and some really good volume coming through today. But I think my questions of valuation would prevent me from thinking about buying into Gentrack. But I suppose solid results, but not hitting it out of the park results for me to think about maybe trading it again. Stock of the day, sort of a no-brainer in my opinion, and it's New Hope Coal. New Hope Corporation, share price down 7.63%. So it was down about 9% at one point. And quarterly activity report, yeah. So they did release a quarterly activity report. Now, there was a bit of a downgrade, if I remember correctly. Pretty sure there was a downgrade. So underlying EBITDA 155 million, down 27%. Realized sales price 147.5, down from 159.1 dollars. But again, this company is a mining company. So the financial performance of this company is going to be highly influenced by the price of the commodity they are mining. So if coal falls 100%, no, not 100%, if coal falls 99% from here, share price of New Hope is going to fall a fair bit. But on the flip side, if coal prices rise 99% from here, you will see New Hope share price rise a fair bit. Now, there's always a little bit of subtlety in these results, and that subtlety can shift the share price up or down a fair bit. So they did revise financial year 25 guidance for one of their mines, reflecting expected rail performance and availability for the rest of the financial year. So they got results, fair enough, but I don't really care about results. I care about changes in guidance. And so I was looking for this change in guidance. I was going, where's this change in guidance? Is it going to be positive or negative? Because they didn't really say. And we know the share price down, so it's going to be negative. And I was going through this going, where is it? Where is it? Where is it? Oh, did they forget about it? Share buyback, don't really care about that. Here we go, financial year 25 guidance. And it's a really good thing to have a revised column and a previous column. So the first thing I saw was ROM coal production, and that was actually up. I was saying, this could be positive. But then saleable coal production and coal sales both down by 2%. So you might be saying, well, then why is the share price down by significantly more than that? Because of the downgrade. If this was up 2%, if all these were up by like 2%, share price would be up 7, 8%. It's all relative. It's all relative. But this is a downgrade from New Hope, share price down. I want to see if there's anything mentioning in Capital Brief. MinRes shares drop on share exit. There you go. There we go. New Hope shares tumble on downgraded guidance. So I'm just going to see if anything else has been mentioned here. Ooh, look at this. The miner trimmed group guidance by 2%, which included a 9% cut in New Auckland's physical guidance. Okay, so this particular, that's a whole company. For some reason, I thought this was just that New Auckland mine, but the challenges in the New Auckland mine has led to a decrease in the whole company. There you go. Okay, thank you for that capital brief. Profit guidance. Profit downgrade, I mean. No, guided, no, operational downgrade. Yeah, sorry, I'm just going on. I need a bit of a break. Let's have a look at the chart for New Hope Corporation. Ooh, yuck. Meh, meh, meh. Yep, meh, meh, meh. I think the dividend yield's probably nice. Dividend yield 10.43%. But the market could be saying right now, well, with coal prices dropping, there's a chance the dividend will drop as well, which could be true. P ratio 6.15. I'd be interested in New Hope if the P ratio was 66.15. I'd be more interested in New Hope if the P ratio was 66.15 instead of 6.15. Anyway, so that's all I have for this particular video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.